Hi everyone, Harry here with the StockMarketBasics.com. Thanks for watching. This is the introduction to the stock market section video number 1, Why Invest? So why invest? People invest their money for a very simple reason. Everything always goes up. Think back 10 years ago. How much did a loaf of bread or a dozen eggs or pretty much anything cost at your local grocery store? How much was a bag of coffee? How much did it cost to fill up your gas tank? What was your gas bill or your hydro bill? What was your house worth or your car? Now think about all those same things 20 years ago. What we're talking about here is purchasing power and how it declines over time. If you had $10,000 sitting in a bank account 10 years ago and you never touched it, maybe you would have $10,500 today with interest. Would $10,500 buy you the same amount of goods or services that $10,000 would have 10 years ago? In other words, would it have the same buying power? The answer in nearly every case is no. Some things are cheaper, like computers, TVs, and cell phones, but most things just get more expensive. If your savings aren't earning some kind of return, you are actually losing money in terms of buying power over time. Not only must your savings earn a return, but that return needs to be more than inflation for you to be getting ahead. This is called real return. It's your return after the effects of inflation on your buying power. Now go check out some average bank deposit interest rates on the net and see what kind of interest banks will pay you to keep your money there. It's nothing, not even 1%. If you are earning 1% a year on your savings, and the cost of everything is going up by 2% per year, or more, 3, 4, you're actually losing buying power, and your actual return, or real return, is negative. In order to earn a real return, you need to invest in something that is going to grow or appreciate in value. Take oil, for example. In 1999, oil was below $17 a barrel. 14 years later, oil is ranging between $90 and $100 a barrel, and it doesn't look like we'll ever see $17 oil again. You could find value growth in a commodity, stock in a company, a new technology, real estate, or shares in a fund. There are a lot of different ways to earn a return on your money, and it is possible to get your money working for you. There are some amazing success stories out there. Apple was worth $20 per share in 1999, around the time the iMac came out. A dozen years later, after the iPod was released, the stock had shot up to over $600 a share. That's a 3,000% gain over that time period. 30 times your money. There's always something hot that has caught fire and is taking off at any time. The key is to find out what kind of trader or investor you are so that you can make some money in the stock market the smart way with a defined plan going into every single transaction.